Hello guys, welcome to Crypto Mainly. My name's Lee. Wow, haven't heard that jingle for a while. Haven't made a video for you for a long time for various reasons, which I won't go into and bore you to death with. But it's nice to be back. Looking to make some more videos, snippet videos for the VOP group mostly, and then hopefully I'll do some YouTube videos as well in the future. So just jumping straight into the content now, guys. There's a couple of things I've noticed actually of interest which I'd like to share with you. This is the chart we've been watching for a while now. Most of the influencers things on YouTube are talking about this kind of this pennant here, which I'll just show you and highlight for you. So for those of you that can't see, you know, basically most of sort of Twitter and social media and things like that are looking at this pennant, which of course would be a bullish pennant, which of course we've been bouncing around inside. We had a fake out here, which was a bit of a nasty one, and rolling over. But I did say that I thought that we were going to head down before up. So hopefully some of you sort of took the warnings. I remember that I'd shared in the group somewhere in this vicinity at the top here that we were going to perhaps have enter into a corrective phase at that point. So hopefully some of you guys took advantage of that, and I've been trading cautiously, small, sort of scalp trades and things from this point. But as I said in the group, guys, just so that you know, I've got a hodl portfolio where I hold sort of the major coins, Bitcoin and Ethereum, Cardano, some XRP and things like that. So which I hold for the long term, which I'm not going to touch at all. I also have an altcoin portfolio, which is one which I'll only sell at the cycle top. So what I do is I usually, the coins that I trade, the coins that I share into the group are usually the coins that I have in my longer term, sell the top type altcoin portfolio, and I tend to ignore them. And what I usually do, my third option is the trading account. So the trading account, what I try to do is I try to generate USDT, which means that I can then purchase more of the altcoins that I'm holding for the cycle top and add to those coins. So I don't tend to look at US dollar value of those coins. I look at the quantity and volume of crypto that I've got in those accounts rather than the USD value, because the market will shake you out, guys. It's for those of you that haven't been around long enough. I think most of you have, but the market is designed to take the most amount of money from the most amount of people the most amount of time, which is a very famous saying. But and that's what it's designed to do. So it will shake people out. We've had a few liquidity grabs. Up here, this fake out grabbed some liquidity, and then this was looking like a bullish structure again. Came back down, closed the CME gap, which the original, the latest CME gap was in this vicinity here. Obviously, then we got the pump afterwards, which is usual. If CME gap's closed, it was closed. The CME gap rather was created on the way up. So there was a lot of there was a gap that was which was made up of buying, buying positions, shall we say. So it's normal that we come into that CME gap and then those buying positions are closed, and we got the bounce because of those buying positions closed. Very nastily, faked out again and made us look like we were going up, and then got a sudden and large liquidation. You can see now, guys. I thought that some of you hopefully will have looked at this. Let me just highlight that a bit better for you. So this was the path I thought we were going to be taking. I still think that we will. Where we came down. Okay, we didn't come down immediately. We got the pump once the CME gap was closed here. We got the pump, and now we've got the collapse here. We've got this part here where I said we were going to bounce here. This is what's happening here. So we're a little bit out of schedule, but nonetheless, I can see us bouncing here and then coming down. A couple of things I've noticed actually, guys. You'll see that I've added these three items here, which are basically made up of the previous all-time highs. So if you have a look at on a daily chart, this is just a bit of a bare chart. But if we zoom into the previous all-time highs, you'll see what I've done here. So basically, the green are daily. So you've got the daily previous all-time highs there, daily close. Okay, and you've also got the the blue one there, which is a weekly close. So if you go to the weekly chart, not 5 days, sorry, weekly, you'll see that the weekly close is the blue line here. Okay, so these price points, you've got 67,556, 66, 67,556, 66,023, and then the weekly high was, the close was 65,502. So if we add those price points onto the chart we've been looking at, here you can see those are the two green daily ones, excuse me, and the weekly chart there. You can see that, you know, we've been flirting. You know, again, you know, this very likely created a lot of shorting liquidity, which we then bounced and obviously took out that liquidity. This fake out, you know, was basically a liquidity hump. We know that there was a lot of liquidity here. You know, we're bouncing out. This is very, very choppy, guys, but I can see what's going to happen here. Ignoring, I mean, if we trade what we see on the charts, okay, whilst we're inside this pennant, okay, we are in, you know, no man's land as far as this is a consolidation, which is great. We are consolidating above or around the previous all-time high range, which again would be expected. It's flirting, you know, above and below it, which is a little bit concerning, but nothing really too much to worry about. You will expect to see that. And whilst we're in this pennant, we are in no man's land as to which direction this will break out. But just based on experience, guys, rather than, you know, anything else, the amount of time that I've been in, what I try to do is think about what the big money is going to do, and the big money have to create liquidity in the market for the price to continue upwards. So it is healthy, unfortunately, for the people that do get liquidated. It's healthy for the market, and those sponsors, let's call them sponsors of the next upward movement. You know, they fall foul, but it's a healthy thing to happen. But if I just show you something which has sort of crossed my mind, if I just I'm going to draw a parallel chart, a parallel line just there, okay, and I'm just going to draw that down to the bottom here, and as you can see, I'm just going to move this about manually just for a second. Just bear with me for a sec. Okay. I think this is quite interesting. You know, you've got this pennant which is fooling everybody, and it's going to create a lot of liquidity below this support line. So this blue dotted support line under here is going to be creating a lot of liquidity here. We've already a stab into it, which is, you know, went into the CME gap, but you'll notice that hasn't closed the CME gap yet. So one way or another, we've got to close this CME gap. Okay, 92%, you know, of the time the CME gap will get closed. Okay, it doesn't have to happen. As I say, 90% isn't 100%, but it's a very good possibility, you know, probability-wise, statistically-wise, we're going to close the CME gap. The question is, how far down do we go? Do we get, you know, this purple path type situation where the bulls don't, you know, just take over, take, you know, control at this support level again, and don't let, you know, the market lose too much momentum? Or do they push it below, you know, and cause everybody to be shorting, create a lot more shorting liquidity where prices are coming down and everybody thinks that it's going to be a huge disaster, and then we get a bounce and support somewhere at this, you know, at the sort of 58,000 mark, and then off to the races. It's something to think about, guys. There's no guarantees. The market structure at the moment isn't suggesting that that is definitely going to happen. But you can see that if we did get that, if that does happen and it breaks down, you can see prices already trying to break through support. If it does happen, it will close the CME gap. It will come down. It will probably, you know, a lot of people will think that, you know, it's the end of the world and start shorting, and it will create another, you know, sort of huge amount of liquidity above us, which will then fuel the price. It will drag the price towards liquidity, take the liquidity, and then likely carry on, you know, up into the after the halving, post halving, you know, up into the heavens is what we're expecting. So let me just show you just on this chart as well. If, let's say, for example, if I just take this all away for a moment. Okay, so let's talk about the pennant again. If we, you know, if the pennant breaks down or up, then the measured move of that breakout would be the open end, the wide end of the pennant, as I'm sure most of you will know. But if that does happen, and you get the breakdown somewhere around here, you know, again, you know, we're looking in the vicinity of the lows of this, you know, that parallel channel that I drew earlier. But also, if you look back through time, excuse the mess at the bottom, this is a chart that I trade with, but you can see if we go back to, you know, when we were at the 47 to 52 mark, you can see that there's, you know, you've got the highs of the range here and you've got the lows of the range here, which projected out come to these, these two lines here. So the dotted blue lines here, and you can see quite clearly that that would be quite a nice support zone, and that would be the measured move of the breakdown. So if that did come down all the way down here, we're looking at all the way down to sort of low 50s, which if we look at this chart again, you'll see that low 50s is actually the right shoulder here, and you'll notice the head and shoulders. This is a weekly chart. If you go down to the sort of 2-day chart, you might be able to see it a bit better. But you can see this is a clear head and shoulders here. Let me just make sure that you guys can see that. I can't find my brush. Sorry, guys. Yeah, so you've got this head and shoulder pattern here. Okay, so excuse my drawing, but you've got a head and shoulders pattern there. I should draw it properly for you. So the head and shoulders pattern is here. From the previous all-time high, you get the idea. You've got a head and shoulders pattern here, and so the peaks of the shoulders align with the that 52 to 54,000 level. So that would be the if we end up breaking down and coming down that far. And you'll also notice that if you draw on the fib from the from the very bottom, the lows all the way up to where we are at this recent high, you'll see that that's the 382 retracement. 51,500 is the 382 retracement. So it would be in a bull market, be very comfortable and sensible and healthy and everything else if it comes down to a 382 retracement and then carries on to the upside. So it's something to think about, guys. It just looks like the market could do that to us. Although, having said that, if we do trade what we see on the charts at the moment, currently we are still in the pennant. We're in no man's land, and if we break to the upside of this pennant, then clearly the target is going to be 80,000 plus. So I hope that helps, guys. Just be careful at the moment. The Bitcoin dominance is rocketing. The Dixie is also looking very, very strong. So the crypto is going to have an inverse effect to that. So whilst dominance is pumping, what you'll usually see is liquidity. Well, there's a couple of different options with Bitcoin dominance. It does get a bit complicated. It's quite difficult to read, and I usually read it in relation to what's happening with the total chart as well. But whilst dominance is pumping, what we're hoping to see is dominance pumping and the Bitcoin price going up. If we see Bitcoin dominance pumping whilst the price comes down with Bitcoin, then that means that money will be leaving the market. So that's something that we don't want to see. The Dixie pumping like that is also going to have an inverse effect on crypto. So whilst the Dixie's pumping, crypto's going to be coming down. So I think we still need to be careful for a little while, guys. And the halving's coming, so there's exciting times ahead. Don't get disheartened, please, guys. I mean, if your portfolio is down, just close your laptop. Just don't look at your portfolio. If it's something where you're getting to the point where you're looking at it every day and thinking, I need to close these trades, it's going to keep going down, you will end up regressing it in the future. Now, you might have to go through some pain waiting, watching your balance going down and down and down, but what is to come is going to be incredible. This move here is the start of a parabola. Okay, there's no doubt about that. You can see that that's a parabolic curve. But even if that was a parabolic curve, you can see that the levels as such. You've got probably, this is probably the first level, second level, and this is the third level. Now, on a parabolic curve, usually your price would double from the third, the base of the third level. So if we're talking about 65 to 70,000, that would give us a projection for 140,000 from here. And as you know, guys, I think that the cycle peak this year round will be, this time round would be between 130 and 170,000. But that was before the ETFs were approved. And now that the ETFs have been approved, literally, guys, we are in no man's land. And every cycle, Bitcoin surprises everybody. Every cycle. I can remember when Bitcoin wasn't climbing above 10,000 for a long, long time, and there was talk that the Bitcoin would never ever break 20,000 again. It took so long to break 10,000. Then when we got close to 20,000, there was talk saying that it was just, it still wasn't going to break. It was never going to go any higher than that. The market was overextended, pretty much the same as what's going on now. And we know what happened after that. So, expect the unexpected. There are some market structures which suggest that we might see 500,000 Bitcoin. On that would be on an extended level, fib extension on a 2.618. So, and it's it's factual. Looking mathematically, it's happened in the past, could happen again. It's real, So just be prepared, guys. It could be. We're looking at somewhere between 150 and 500,000. I know that's a huge range, but that's a fact. Dude, pay attention to Plan B. He does know what he's talking about. He's been right all the way along. He was calling for 100,000 last cycle, didn't happen. But I mean, in light of the fact that how much he's been right since the start of his models, he's a guy to pay attention to. And even he is saying you could be looking at a $1 million Bitcoin, 500,000 to a million at this next cycle peak. So let's look forward to that, guys. It's going to be a really exciting time. I'm very excited about it, and I'm looking forward to it. And hopefully you'll enjoy the journey with me, and we can make some. It's been hard. It's been tough. It's coming up. The crypto, mainly Telegram, is coming up for 2 years anniversary on June the 1st, and we started at the very depths of the bear market, probably the worst time we could have ever started it, and hence probably some of the reason why the group hasn't grown massively over that period. But thank you to all you guys that have stuck by me and are still in the group and have stayed, and a lot of you have been there since the start of the group, and I really appreciate it, guys. And the new members, I'm really obviously, everybody it's great to have you all in the group, and I really sincerely hope that we get to the end of this bull market and everyone just thinks, wow, that was a great find. Being in the Cryptomanias group was great. We're all happy and everybody's made a lot of money, and we won't look back. So anyway, guys, I'm going to stop waffling. Thank you very much for listening, and take care, and I look forward to speaking to you soon. Thanks, guys.